You might know finance expert Robert Kiyosaki from his book Rich Dad, Poor Dad, which he co-wrote with Sharon Lechter in 1997. In the book, Kiyosaki dispenses financial advice that he got from his best friend's dad, otherwise known as his rich dad, on real estate investing, entrepreneurship, and other methods on how to become wealthy. Robert Kiyosaki, author of the best-selling book Rich Dad, Poor Dad, is a well-known advocate for financial education and wealth-building strategies. One of his key principles is the idea that the rich invest in assets that generate passive income and appreciate over time. Robert Kiyosaki is a shining example of how smart investing can make a big difference. With a net worth of over $100 million and a monthly income of at least $1 million, the well-known financial guru has come a long way since his first venture in 1972, when he became a gold investor. Since then, Kiyosaki has invested in multiple businesses, real estate, and stocks, and has become a household name in financial literacy and investing education. He espouses financial freedom by adopting the habits and behaviors of rich people. Here are the 5 types of assets that Robert Kiyosaki recommends for building wealth. Number 1. Paper assets. Paper assets include stocks, bonds, mutual funds, and retirement accounts where you can invest in stock options, stock futures, and foreign exchange. Paper assets also include real estate investment trusts, or REITs, and exchange-traded funds, ETFs. Whether you're investing for capital gains or for cash flow via stock dividends, there are many paper assets from which to choose. That's why most people invest in paper assets or the stock market. These are the easiest assets to get in and out of. And even though your financial planner or advisor may tell you that your retirement funds or 401k investments are diversified, they really aren't. You still need to diversify amongst the various asset classes. Number 2. Commodities. Commodities include metals, gold, silver, copper, etc. Food, grains, corn, coffee, and sugar, and raw materials, oil, gas, cotton, etc. Commodities are generally a capital gains or loss investment, and you can buy future contracts of any commodity through the future exchanges. If you are a new investor, start small and build your financial education. For example, start by purchasing a single silver coin and then watch its value increase or decrease in your daily news. Your financial IQ will go up exponentially by having a little skin in the game and paying attention to what happens to that coin. We'll touch on cryptocurrency a bit later, but it's worth noting now. You may already be familiar with the term Bitcoin, which is one type of virtual currency or cryptocurrency. As of today, 1 Bitcoin equals $28,348.31. Thankfully, you can also start small here by buying a fraction of a Bitcoin instead of committing to a whole one. Number 3. Business. This is an asset that people have become more aware of thanks to television shows like The Apprentice and Shark Tank. Within this class, there are 2 routes to take. 1. Invest in your own business, or 2. Invest in someone else's private business or company. The whole point is to generate a return back to you, the business, and your investors and/or lender. Number 4. Cryptocurrencies. Cryptocurrencies like Bitcoin, Ethereum, and Litecoin are the new assets on the blockchain. Rich Dad considers cryptocurrency to be the people's money because it's created by and for the people separate from any government entity. And unlike other forms of digital currency like credit cards and wire transfers, cryptocurrencies are impossible to steal or counterfeit. Number 5. Real estate. Real estate investments either provide cash flow from rental properties, the overage you make each month from rent once all your costs are paid, or capital gains, a one-time profit from buying and selling a property. With real estate, you use leverage or the ability to use other people's money, OPM, to purchase the asset. As Kim Kiyosaki discusses in It's Rising Time, a property that is highly leveraged means there is a lot of debt on the property compared to the equity, or current market value minus the debt. The higher the debt on the property, the lower the cash flow. The lower the debt, the higher the cash flow. the ability to use other people's money, OPM, to purchase the asset. And here's an interesting tidbit you may not know. You can use cryptocurrency to purchase real estate. Robert Kiyosaki's financial philosophy centers on building wealth by investing in assets that generate passive income and appreciate over time. While these 5 asset classes are a part of his recommended investment strategy, it's important to note that he also emphasizes the need for financial education and ongoing learning. Understanding how these assets work and how to manage them effectively is crucial for success. Ultimately, Kiyosaki's message is clear. Anyone can achieve financial independence and build wealth by making informed investment choices, continuously improving their financial knowledge, and taking calculated risks. Whether you choose to invest in real estate, stocks, start a business, create intellectual property, or diversify with precious metals, the key is to take action and work towards your financial goals with determination and diligence. Diversification of your assets, and a safety net that's a way of hedging your bets in any one investment arena or sector. Business can be a small business you own and plan to grow or sell. Commodities can be silver or gold coins. Paper assets can be a few shares in a stock that interest you, because having skin in the game, even if it's just a little bit, will heighten your awareness related to markets, trends, and money. Rental real estate is a way to use debt, good debt that your tenants pay, for both leverage, cash flow, and possibly capital gains. You need a plan. Start small, learn along the way, keep learning. If you found this information valuable, please give us a thumbs up, subscribe, and share it with your fellow investors. As always, stay tuned for more insightful content from. Thanks for watching.